Ira Epstein of Linn Associates with your financial market weekend edition wrap-up, and this is for Friday. And we are now on the 17th of January, 2020, just getting on the 4:50 p.m. Central Time. Remember, Martin Luther King Day, yay Martin, but the markets will have abbreviated trading hours from Sunday into Monday noon. Not every market will be open, electronic only. So be aware of that. Be aware that Tuesday, everything gets back to normal. So we've already sent out the hours and so on to our clientele. This was a pretty big week, right? We had the U.S.-Chinese trade deal. We get the USMCA to finally pass the Senate, go to the president's desk, and of course, the impeachment. Now, you're going to ask, why did the stock market rally on impeachment? And the real reason, I think, is it's no longer an event that's hanging over our head. It's here. We don't know the outcome. I have no idea what's going to be said. And of course, there can be anything that happens that jolts the market. But the reality is it's here, it's going to come, and then it's going to be gone. And it may be gone in that first week of February. They'll probably give it a couple of weeks and away you go. So you have to be aware in your positions that you could get jolts in the market once the trial begins. We don't even know if there's witnesses coming. So you're going to read all weekend for how it's going to begin, what the rules are, and then we'll see how things play out Tuesday, but the news waves, they'll be full of this. When we come over to the S&P 500, a monthly chart, what can I tell you? It's only halfway through the month, but here you are up another 94 points at an all-time high. This is called a parabolic move. No news is bearish. News seems to be bullish, whether it has a bearish connotation to it or not. The market just seems to run with it. It's pretty wild. When you take a look at a weekly area chart of closes, do you disagree with me that here you got to close at 33 and a quarter, the all-time high, 33.30. So if anyone has a profit, it's somewhere between that 5-point spread. But otherwise, this open interest is wrong. And I realize people keep saying it can't go on forever. As a chartist, that's not true. Nothing grows to the sky. I'm aware of that. But the idea of a top being something too high or a bottom being something too low. See the white hair? I've been through it all. And I'm sure there's things I haven't been through I'm going to see again. But I learned that you get rid of that concept. That's for the fundamental guy, the valuation guys. Let them do that. They always have a reason why it's too cheap, too high. I don't know. I just watch the chart. The chart action is still bullish. And the market has a pattern, and it's had one of higher lows, higher highs. Until that pattern is broken and you get neutral on a weekly basis, the daily has done it. The weekly seems to refuse it consistently. Nah, you're still bullish. Remember, this is the bigger picture, the others, the day-to-day. And don't get me wrong, day charts are all important. I mean, the week is made out of the day. The day's not made out of the week. Got that? Then you're looking to see that the market's got bias because it's over the 18-week average, which is over the 100-week, which is over the 200-week. Then I go to the resistance. Now, one of the things that I use, and there are several resistance points I look at. When I teach charting, I look at Bollinger Bands, which I show you here, and the next one that I look at are window envelopes. I teach window envelopes, my own theory on them, how they're plotted. You get it in my charting course, and I put out those numbers for my daily subscribers. But on the Bollinger Band, the theory is the market will trade within these bands, the algorithm, if you will, 95% of the time. I'm always looking to see is momentum with the market, because if momentum is with the market, it tends to lock in against that band in a real bullish situation. And the momentum I use is slow stochastics. Some use MACD. Some use RSI, Williams RSI. There's Chalkin indexes. There's indexes galore. You have to learn them and decide which one fits your temperament, your style of trading. There is no one that's better. I've learned that. I would not use more than one momentum index. They will confuse you. They start working against each other. So when I set up charts, what I do is it's like a game of dominoes. Each one builds on the next. Now you might say, well, that's what they fall apart. Nah. Gives you a trading discipline. That's what you're after. So we're at a resistance point. The odds are the market doesn't like to stay over the upper Bollinger Band, and on pullbacks until we know something different, the market's being well supported. It's identical with that momentum that's staying to the upside in the slow stochastic. And momentum to me on a weekly chart's either pointing up, pointing down, or neutral. I consider this still pointing up. The market hits the Bollinger Bands, backs away, hits them again, and you've had this pattern consistent, higher lows, higher highs. The difference on this chart is it went into a stall pattern. And I'm always looking for narrowness in Bollinger Bands, because out of narrowness, like you're getting there, it's like it's funneling in energy. And that energy doesn't have to break out to the upside. It could break out to the downside. But when it breaks out, it just moves because it's got a base in this case or a top to work from. And you're still working on that. When we come to the Dow's alive too. The momentum's still up. Higher lows, higher highs. You're staying over that 18-week average, which the market often decides what next to do from there. And until this trend's over, it ain't over. That's the way to say it. In the Russell, it's come alive. It was the dogged. It's come alive. And it started coming alive back here in November. And from there, it built the pattern of higher lows, higher highs. It locked itself in, if you will. The momentum started coming up, and then it's just stayed up. And as you can see, coming up again, I'm going to repeat myself. The first challenge of a Bollinger Band after you've backed away from it is still a resistance point to me. In the VIX, if this market falls enough, I'm expecting, in other words, to the lower Bollinger Band, that the pros, and so far this has worked on the daily chart, not the weekly. I don't use the weekly for that, but I'd look for support at that number. What's the trend right now? Well, I can argue you got lower highs, but I can also say you got higher lows. Which one of those? Don't know. When you get that, I call it neutral. The bias is down and momentum is down, but I'm going to say that's neutral there. In the 5-year note, what's bothered me about, or rather 10-year, on the interest rates, if all the economies of the world are getting good, and that's the theory that's happening now, that the trade wars have at least, we've seen detente. We've seen a detente with Iran and the U.S. Yes, they attacked us. Yes, 11 soldiers, unfortunately, got hurt by concussions from the landing missiles and so on. And, at first we heard nothing. I kept saying, how could you do all that damage and nobody had something? And at least nobody got killed. That's the important thing. But how do you make an argument for lower interest rates if economies are picking up? That's something you got to think about. I'm just telling you what I'm thinking. Where are you fighting a battle? Can you see it? It's that 18-week average. Are we trending? No, you're not on the weekly. Got a lower and low, higher high. You got divergence everywhere. You got bias down, momentum picking up. Don't know what to do with that. Dollar index. Yes, the dollar index trying to make this pattern. It's doing it of higher lows, higher highs. This arrow I can remove. But I could also argue that you're still under that 18-week average. Therefore, the bias is down. So I have momentum up, bias down, swing line up. I see a market that's gotten away from getting maybe a little too cheap. The question is it going to be able to rally here? Most experts think this is a year of dollar down. That's what they said last year at this time too. You think I don't read all the different columns that are out there? It's interesting. In the eurocurrency, I see a market winding up for something. What do I mean? Do you not see the sideways action on the weekly chart here? We're not going anywhere, up or down. Now, markets can stay that way for long periods of time. I realize it. But you're not in a trend. You're churning in a sideways action. Mexican peso in an uptrend. You've got momentum up, you got bias up, you just had a bullish crossover. You're always looking to see this. It happened not here. That was last week, the 10th. It happened this week. And you're making new highs, which is the idea behind that. Resistance up now a bit higher at the 53.25 area from where we're at right now. The Canadian dollar, while the daily chart doesn't look good, the weekly's staying fine. It's saying I've got higher lows, higher highs. Now, you negate that trend if the market takes out last week's low, because you then have a lower low. That number's 76.31. But until it's taken out, you might even get on the threshold of seeing the 18-week get over the 100, another bullish factor. So this market, yes, it's in a pause, but there's nothing yet bearish on this chart about it. Japanese yen, well, we had missile day. You all know that. That's what I'm calling it. Market takes off. Everybody's petrified. The U.S. and Iran going to war. The world's going to end. Comes in right like that. The market fails. And you felt this week the impact of that. Maybe you get to the lower band, but the market is not in a trend. It's got a lower low and a higher high as I see it. Bitcoin. The market is playing the halving incident that's coming up. That is when the algorithms that determine how many coins can be mined have it. In other words, they go down. I think at the end of the whole process, I'm not sure, I'm not an expert on Bitcoin. It's 21 million, so they get to X amount of coins. But this chart action's friendly. You got higher lows, higher highs. It came out of its downtrend. You were in a downtrend. You'd hit the lower band. You popped up through this area. Watch, you're now out of the downtrend. Now, this is the first phase where is the market for real to the upside? We'll find out. Brent versus WTI crude. Well, the market in oil that can be at risk at any time, more so than our oil, which is WTI, is certainly that travels through the Straits of Hormuz, and Iran gets quiet, gets loud, you don't know. So the market's got a bid in that. And I can understand that, we just got over a missile attack. But when you look at the chart, you're out of your trend. You got up on missile day, went up through everything, collapsed. Market now back to neutral is the 18-week average. That's where you're at. I call this market neutral right here. WTI, still in an uptrend. Yeah. Why? Higher lows, higher highs. Still have that. So the support in this market comes in here. It's actually a better looking chart than the other, but you do have divergence. You have momentum pointing down, and while the swing line is up and the bias is up, I wouldn't be surprised if we turn around here. Gasoline. I did a gasoline report. I think it's still on the website. It comes off probably today or Tuesday. I forgot which day. It only has 5 business days up. Got up and did what I thought. You got to the Bollinger Band resistance. Now you're back into the area I'm looking for. Keep your eye on seasonals. That's important. Is there a trend at work? Not yet. You have a higher high, lower low, and you're fighting a battle at the 18-week average, and you have momentum pointing down in the heating oil. You've gone from the Bollinger Band high to the low. So as I said, I thought the first challenge of a band right here is where the pros take money off. I think they're taking money off on the other side right down here. You put it all together, you try to come up with a game plan, and that's what I do for you each morning. Each morning, I wake up 4:35 and I do a lot of reading. Then I put together a short part so you can see in my morning video what the market's looking for that day, key reports, did an event happen in Asia, or did something happen in Europe that we should know about. The idea is to give you a trading idea. My trade idea might fit in with what you had. It's not that you follow me. Maybe I'm going to spur on your own ideas. And I cover 40 charts on futures. I want to correct this. We will do this during the week. There are no more ETFs in that morning video. You know why? I now put out for my subscribers, and I began last Monday, an ETF that is a spider ETF video. I do it after about 3:15, 3:30 in the afternoon when the stock market closes. Now, ETFs have a different lifespan than futures. What do I mean by that? Futures typically reopen, let's go to the middle of the week, 5 o'clock or 7 o'clock at night. Then they go to about either 12:30. Some of the markets will finish at 4. But they'll close and they reopen. You get about 22 hours a day on most futures contracts. I'm not including London market, the ICE market, some of those. I'm including most of the bigger markets. Well, in ETFs, you only get 6.5 hours a day. They open at 8:30. They close at 3. You put it together. So why not cover them in an earlier manner for you, and I'll do the futures first thing. That's what I'm doing. So you put it together, you get a game plan. I hit the wrong button there, unfortunately, but the idea here is that I make this affordable. So how I make it affordable is I charge for this in the morning. I'm not going to put out buy here, sell there for free. You don't expect it from a doctor. You're not going to get it from me. And no, I'm not a doctor. But I have knowledge. For that knowledge, I want to be paid, and not much. To try this out, $7.95 for 30 days, no contract. If you decide to stay with it, it's $15 every 30 days. And yes, you can get a 1-year subscription. You pay up front for it. It's equivalent of $13 a month, $156. So that'll give you an idea. In addition, I'm right now throwing in my SPDR ETF afternoon video. So you get all that. Now how it works is I'll list the areas for you here, but there's a slide bar that you just pull along as you're going with that slide bar. It tells you the area you're in. I do the identical thing in the SPDR ETF video. So if you'd like to try all this, it's really simple. Sign up for it and you'll be getting that from us. How do you do it? Go to our website under the word research. It explains the morning subscriber video. You can call my staff on Tuesday. They're gone for the holiday, and I'll see you all in my SPDR ETF video that I'm putting out tonight. Take care.